Have you ever wondered how you can tell if a trend has real strength or if it's about to lose steam? Today I'm going to introduce you to a powerful indicator called the Deviation Trend Profile created by Big Beluga. It unveils the actual behavior of the price within a trend, helping you make more intelligent and informed decisions. If you enjoy finding tools that genuinely make a difference in your trading, stay with me till the end, and I'll demonstrate how this indicator will assist you in grasping the market in an entirely new manner. But what exactly is the Deviation Trend Profile? This statistical indicator helps analyze trends. The idea is simple. It shows how the price is behaving throughout the trend, helping you see the market's rhythm in a way that just looking at a candlestick chart wouldn't allow. It's a unique way to measure the strength of a trend and even predict when it might be losing strength. The first step is to open TradingView, which is the platform we'll be using for this indicator. You will load any chart of your preference. I'm currently on BTC/USDT, but you can definitely use Forex, crypto, stocks, or any other market type you prefer. Regarding the time frame, I'm currently set to the 15-minute chart, but you could opt for 1 hour, 4 hours daily, or any other period you wish. You'll go to the indicator section and look for deviation trend, and it's going to pop up right here. Deviation Trend Profile Big Beluga. You simply click on it and it will then show up on your screen exactly as it appears on my own. The only customization I usually make is to adjust our SMA period. It comes preset at 50, but I change that to 100 and then confirm it. This gives me a much cleaner visual and provides more distinct trend signals. Notice that here it's very sideways and the chart showed that. When a trend started, it showed that too. But okay, how does the indicator work? The first thing you'll notice is a moving average line that changes color depending on its angle. This already gives you a quick read on the current momentum. Around it, dynamic zones emerge, which are computed using 1, 2, and 3 standard deviations relative to the mean. The interesting thing is that these zones adjust based on the market's volatility, utilizing the ATR. When the market becomes more volatile, the bands expand. Conversely, if it's calmer, they contract. Another important detail is the colored circles that appear on the chart. Blue, possible start of an uptrend. Red, possible start of a downtrend. And below, you'll see a histogram, the indicator's heart. It shows how many times the price has closed within each standard deviation zone, but only during an active trend. It functions as a unique fingerprint for that particular trend, indicating its strength and overall health. And now I know you must be thinking, but how will I utilize this indicator for my day-to-day trading? However, before we go on, many of you often ask me which brokerage I use to trade Forex, stocks, or cryptocurrencies, and the answer is EXNESS. For me, EXNESS is the best and most complete brokerage firm out there. If you've ever got frustrated with your broker, you'll understand. Many brokers delay order execution. EXNESS executes instantly. Some brokers charge high spreads. At EXNESS, both spreads and fees are remarkably low, truly among the lowest you'll find in the market. Have you ever had to wait days for a withdrawal to process? With EXNESS, your money clears almost instantly. And best of all, you can adjust the leverage almost infinitely, as you wish, while controlling your risk. So if your brokerage freezes, overcharges, or delays payments, it's time to switch. The link is in the description. And as I said, I consider it one of the best brokers with the lowest market fees. And the simplest way to utilize it is through the signal circles, as potential entry points. The appearance of the blue circle along with the moving average turning blue indicates an uptrend. When the price pulls back to this average, it can be a good time for us to enter a trade. Observe how, at this specific point, it even temporarily dropped below the moving average. However, it still remained blue and was pointing upwards. So when the price bounced back to the moving average, specifically on this candle, it formed a massive power candle. This then allowed me to open my buy trade with the intention of capturing the continuation of this uptrend. So I would place it at the finalization of this candle, I would set my stop below the moving average, and in this specific case here at 0.67, 0.65, and I would be looking for a return of 2 times upwards, that is to say around 1.20 more or less there, 1.225, which it hit exactly at this moment, giving us a good take profit opportunity for the operation. The downtrend operates in the same manner but in the opposite direction. We can expect the chart to show our red circle. Once the price crosses below, a significant downtrend commences. We then await the exact moment it makes contact with the moving average once more, yet fails to penetrate it. In other words, it's showing that it's making a pullback here. When this specific candle appeared, which was both a strong bearish candle and also indicated a rejection of the upward movement due to its wick, we could have initiated our trade right there. Always entering at the candle's close, we'd place our stop loss slightly above the moving average. In this particular scenario, this would have resulted in a loss of 0.11%. And we placed our take profit 2 times lower, right here at 0.22, and it was hit almost instantly afterward. And there's also something really cool about this indicator that you can always use to your advantage. When the current price is shown in real time, this indicator displays a histogram. The larger the bars filling the lower part of the histogram, specifically the -1, -2, or -3 levels, the stronger the downward trend. This indicates a very robust and healthy downtrend. It's quite interesting to consider entering a bearish pullback if one were to actually occur. Similarly, if this histogram were absent and all the bars were tightly clustered around the midpoint, very close to the moving average for example, we wouldn't enter a trade. The reason is that the trend wouldn't be strong and the price would essentially be consolidated. So we should only enter if this zone is already filled, especially if we are aiming for a bearish continuation. For a bullish continuation, the situation would simply be the inverse of that. We would need bars to completely fill this upper zone extending all the way up to the +3 level. The more bars there are in these zones, the more powerful the trend strength is. If it's right here in the center, very near to the moving average, this indicates that the uptrend lacks strength, making it unprofitable to engage in a buy pullback. Remember, this indicator here is experimental and was created for educational purposes. No single indicator is enough to build a complete strategy. So always combine it with price action, risk management, among other things. And if you don't feel comfortable, seek a professional to invest. This video is not an investment recommendation nor a suggestion to use the indicator for buying or selling assets. The deviation trend profile is an incredible tool that helps you understand the quality of a trend and position yourself more consistently during pullbacks. If you found this explanation helpful, definitely hit that like button, subscribe to the channel, and leave a comment saying more indicators so I know you're interested in more tools like this. That's everything for today's video. Thanks, goodbye, and I'll catch you in the next one.